The UK government is investing £9 billion annually to encourage business investment. With generous tax relief of 25 pence in the pound for qualifying capital expenditure, now is a great time for businesses to invest. But what allowances are available and what are the pitfalls? I'm joined by my colleagues Soraya and Paul, who are going to help explain. So Soraya, to you first. There's been lots of changes to capital allowances in recent years. Is it all good news for business?
By and large, it's been very good news, which underlies how importantly the government views capital allowances for economic growth. The introduction of the structures and buildings allowance has allowed businesses to claim tax relief for the purchase, construction and renovation spend that previously didn't receive any tax deduction. But that's quite a slow rate of relief. It takes 33 years to receive it. The decision to permanently set the annual investment allowance at £1 million is a positive for business. AIA allows businesses to claim 100% tax deduction in year one on their first £1 million of expenditure. So for many businesses, this means that all their qualifying capital expenditure would quickly receive tax relief. This was followed by the super deduction, a 2-year incentive that gave up to 130% tax relief, and that was in place from the 1st of April 2021 to the 31st of March 2023.
So now we've come past the 31st of March 2023. Is super deduction still relevant?
Yes, it is. Businesses have 2 years to submit a super deduction tax relief claim. So companies with a 31st of March 2023 year end have until the 31st of March 2025 to submit a claim. And we're still very busy assessing super deduction claims for companies.
That's a lot of really good tax relief. So Paul, just coming to you, has anything been announced to replace super deduction?
Yes, it has, Peter. From the 1st of April 2023, we're now in an era where there's permanent first-year allowance 100%, known as full expensing. Businesses can now claim an uncapped 100% first-year allowance for investment in certain assets, such as office equipment and machinery. The 50% special rate allowance also continues, and that gives tax relief on assets such as heating and lighting. This is a real stimulus for investment and will boost productivity and growth. In essence, full expensing is really the super deduction in disguise. It allows businesses to reduce their taxable profits in line with 100% of their qualifying expenditure, which is a great boost for businesses. As alluded to, full expensing and super deduction have similarities. They're both uncapped, they both have complex exclusion rules, and in particular, there are no complex timing rules associated with full expensing. Perhaps the key thing is the new disposal rules which have been introduced for full expensing, but we can help with that.
Thanks, Paul. It's great to hear that there's positive news for businesses now that they've replaced super deduction with full expensing. So with all of those generous tax reliefs out there with full expensing and super deduction, it is especially important for businesses to review their capital expenditure that they've incurred since April 2021 to ensure that they maximise the tax relief available. And we've got a great team to help.